Hey everyone, welcome back. Today we're going to be taking a deep dive into some pretty interesting stuff.
Yeah.
We're talking about the 2025 Indian Union budget.
Mm-hmm.
You're probably wondering how it's going to impact your investments, right?
Oh, for sure.
Especially when it comes to debt mutual funds.
Definitely.
We've been poring over the Indian Express.
Great source.
Yeah, and they've got some insights that suggest some pretty big potential shakeups.
Absolutely. There's a lot of talk about this budget,
Yeah,
especially with the Association of Mutual Funds in India.
AMFI.
Yeah, AMFI.
Yeah.
They're really pushing for some changes.
Mm.
Some major changes to how debt funds are treated when it comes to taxes.
It's causing quite a stir.
Oh, yeah. There's a lot of debate.
Yeah,
Some of what they want could be amazing for investors,
absolutely.
but some of it is raising eyebrows.
Definitely. Let's break down what they're asking for.
Sounds good to me. Where should we start?
Well, one of the biggest things they're pushing for has to do with indexation.
Okay.
Now, I'm sure you know what indexation is, right?
I think so.
It's basically a way to adjust the value of your investments
Right.
to factor in inflation when you're calculating taxes.
Right.
But here's the thing. Remember, back in the 2023 and 2024 budgets,
Yeah.
the government took away indexation benefits for debt funds.
Yeah, that was a huge change.
It really was. It really shook things up in the investment world.
Sure.
And now AMFI is fighting hard to bring it back,
Interesting.
specifically for investments that were made before April 1st, 2023.
Okay, so if you invested before that date,
Yeah, just imagine your older investments could be protected from inflation when you're figuring out your taxes.
so they'd potentially be worth more in the long run.
Exactly. That's a pretty sweet deal for investors.
Yeah, I can see why they'd want that.
AMFI's argument is that if we bring back indexation,
Yeah,
it'll boost confidence for investors.
made sense.
And more people will be willing to put their money into debt markets.
And that could really stimulate growth in that whole sector.
Exactly. A more appealing tax situation could definitely attract more investments.
Definitely.
But here's the question. Wouldn't the government lose out on tax revenue if they bring indexation back?
That's a really good point. And it's where things get a little tricky.
Okay.
Yes, the government might see a dip in their revenue at first,
Right.
but AMFI's counter-argument is that if more people participate in debt markets, it could actually lead to broader economic growth.
Okay.
And in the long run, that could actually boost tax revenue.
So it's that classic short-term pain versus long-term gain situation.
Exactly. The kind of tough choices policymakers always have to face.
It's a really interesting dilemma. It'll be fascinating to see what they prioritize.
Absolutely. It's a balancing act.
So that's indexation. Another big thing on AMFI's wish list is about capital gains tax rates.
Okay.
I know tax stuff can be a bit dry,
It can be.
but stick with me on this one because
Got it.
it could seriously affect your wallet.
All right, I'm listening.
Right now, there's no difference between short-term and long-term capital gains for debt funds.
Right.
So everything just gets taxed at your regular income tax rate.
And that's a fairly recent change.
And it's right before 2024.
Yeah.
Long-term gains on debt funds were taxed at a flat rate of 12.5%.
That's a big difference.
It is. And AMFI wants to go back to those pre-2024 rates.
So essentially a tax cut.
Yeah, it might seem like they're just trying to be nice to investors.
Less taxes, more money in your pocket.
Exactly. But there's a bigger picture here.
Okay. I'm intrigued.
It's not just about individual gains. AMFI argues that this move could encourage investors to hang on to their debt funds longer,
Interesting.
which would create more stability in the market.
So it's not just about giving investors a break. It's about building a stronger, more reliable debt market.
Exactly. But wouldn't that go against the government's revenue goals?
That's the other side of the coin.
Didn't they raise capital gains tax rates last year to make more money?
They did. The 2024 budget was all about bringing in more revenue from capital gains.
So AMFI's proposal is kind of creating a tug of war.
It is the government has to choose between a stable debt market and their immediate need for cash.
Another tough decision.
It's a tricky one for sure.
And these are just two of the big things AMFI is pushing for.
Wow.
They've got a whole list of requests that could completely change the debt market.
This is getting interesting.
It is. Let's dive into those next. This AMFI wish list is full of surprises.
I'm ready when you are.
All right, so we've talked about indexation and capital gains tax rates.
Right.
But AMFI's not done yet.
Oh, there's more.
Oh yeah, they've got some ideas about fund of funds.
FOFs.
Yeah, specifically the ones focused on equities.
Okay, this is where things get a bit more complicated.
Yeah.
AMFI is saying that the current rules make it harder for those FOFs to actually invest in funds that are equity-oriented.
So they're kind of stuck.
In a way, yeah, they think it's creating a bottleneck, which could be holding back investment in the equity market overall.
So they're basically asking for the rules to be tweaked.
Exactly, to make those equity-focused FOFs more effective.
I see, but would that really make a difference for the average investor?
It's a subtle thing,
Okay.
but it could be significant if these FOFs have more freedom to invest in equity.
Mm-hmm.
It could lead to better diversification
Okay.
and potentially even higher returns for investors who hold those FOFs.
So it's like a chain reaction.
Yeah,
Little changes in the rules could end up benefiting investors down the line.
exactly.
Fascinating. What else is AMFI asking for?
They're also pushing for something they call pension parity.
Pension parity.
Yeah, it's about mutual fund pension schemes.
Okay.
They want those schemes to get the same tax benefits as the national pension scheme.
The MPS.
Yep,
Okay, that's a pretty big deal, especially for people who are thinking about retirement.
absolutely. It's
Yeah.
all about planning for the future.
So what's AMFI's reasoning behind this?
They believe that if mutual fund pension schemes had the same tax advantages as the MPS, it would make them a more competitive option for retirement savings.
I see.
And it could encourage more people to invest in those schemes,
Okay.
which would give them more control over their retirement funds.
That makes sense, but wouldn't that kind of undermine the MPS?
It's a valid concern.
I mean, the government's been promoting the MPS a lot.
They have.
And if mutual fund pension schemes get the same benefits,
Yeah.
it could create some overlap.
It could, and it might weaken the impact of the MPS.
So it's a trade-off.
It is. It's about finding the right balance between promoting competition and keeping a good system working well.
Another tough call.
It's a tricky one.
It seems like everything on this AMFI wish list has its pros and cons.
That's economics for you. It's all about trade-offs.
Okay, before we get too deep into the weeds,
Sure.
you mentioned something about infrastructure investment.
Oh, right. AMFI also wants tax incentives for mutual funds that invest in certain infrastructure projects.
So if a mutual fund puts money into, let's say, building a new highway,
Yeah, or a bridge or a power plant, something like that.
like a tax break.
Exactly.
Interesting. And that fits in with the government's push for more infrastructure spending.
It does. It's a strategic move that could help boost economic growth.
So it's win-win situation.
It could be investors get a tax break and the country gets better infrastructure.
It sounds almost too good to be true.
Well, there are always things to consider.
Like what?
The success of this proposal depends on which projects they choose
Okay.
and how well those projects actually support economic development.
So it's not just about spending money on any random infrastructure project
No, it's about investing strategically in projects that will actually benefit the whole country.
and create jobs and stimulate the economy.
Exactly. It's got to be about sustainable growth.
Okay, so we've got indexation, capital gains tax rates, FOF regulations, pension parity, and infrastructure incentives.
That's quite a list.
It is. AMFI is really going all out with the requests, but let's be realistic. Do you think there's any chance they'll get even half of these things approved?
That's the big question, isn't it?
It is.
It's tough to say for sure. The government has to consider everything.
Right, all the potential benefits of each proposal.
Yeah, and weigh them against their overall economic and fiscal goals.
It's like a giant chess game.
It is.
AMFI makes its move,
Yeah,
and the government tries to figure out all the possible consequences.
exactly. And we can't forget that the budget isn't just about numbers.
Right.
It's a political document, too.
True, there are always different interests and priorities at play.
Always.
So AMFI's wish list is ambitious,
It is.
but we'll have to wait and see how much of it actually becomes policy.
Exactly. It's all about finding a balance.
Okay, so we're in wait-and-see mode.
For now. Yeah.
But even if the government doesn't say yes to everything,
Mm-hmm.
it's clear that AMFI is making their voice heard.
Oh, definitely.
Yeah.
They're advocating for changes they believe will help both investors and the market as a whole.
Absolutely, and that's important for our listeners.
It is stay informed, get involved in the conversation, make your opinions known.
Because these decisions could really shape the future of debt markets.
They could, and ultimately your financial well-being.
Speaking of staying informed, there's one more thing from AMFI that I think we should take a closer look at.
Okay, what is it?
It's a bit buried in their list of proposals,
All right.
but it could have some interesting effects on how we manage our investments.
I'm curious.
Tell me more. It's about the securities transaction tax.
STT.
Yeah, it's a mouthful, but it's worth understanding because it could directly affect how much it costs to invest in mutual funds.
Okay, for those who might not know,
Right.
STT is basically a tax on buying and selling securities.
It's like a small fee every time you trade.
Exactly.
And AMFI says that the current STT rates for mutual funds,
Hmm.
especially for futures and options, are putting them at a disadvantage.
Compared to other players in the market.
Right, so they're arguing for a level playing field.
Yeah, they don't want mutual funds to be unfairly burdened by these
Makes
taxes.
sense.
They believe that lowering STT rates for mutual funds would let them operate more efficiently
Okay.
and maybe even pass on those savings to investors.
So lower taxes for mutual funds could mean lower costs for investors.
That's the idea.
Interesting.
But of course, the government has to think about its own revenue needs.
Right.
Lowering STT rates could reduce their tax income.
At least in the short term.
Exactly.
That balancing act again.
It always comes back to that.
Trying to keep investors happy while also making sure the government has enough money to function.
Tough job.
It is. So we've got AMFI's proposals on indexation, capital gains, tax rates, FOF regulations, pension parity, infrastructure investment, and now STT.
Wow, that's a lot.
It is. AMFI's really given us a lot to think about, but I think it's important to zoom out a bit.
Okay.
Look at the bigger picture. What does all this mean for the average investor?
Yeah, that's the key question, isn't it?
How could these proposals, if they actually happen, change the whole landscape of debt markets?
That's what we need to figure out next.
Okay, so we've gone through AMFI's whole wish list.
We have.
But what does it all mean for the average investor, like you and me?
Right. That's the important question.
If the government actually goes along with these ideas, how could things change in the world of debt funds?
Well, imagine debt funds become way more attractive.
Okay.
Not just for people who are already investing a lot,
Mm-hmm.
but for anyone who wants to grow their savings.
Okay, I'm trying to picture this.
Right.
What makes debt funds so appealing in this hypothetical situation?
Well, let's start with indexation.
Okay.
If they bring it back, your older debt fund investments could see a real jump in returns after taxes. Inflation wouldn't eat away at your gains as much.
That's a big deal.
Yeah, especially with how the economy is right now.
So debt funds could be a good way to stay ahead of inflation.
Exactly. Especially if you're looking for a relatively safe investment.
And then there's the possibility of lower capital gains taxes.
Right. If the government goes back to those pre-2024 rates,
Hmm.
it would make holding those investments for a long time even more profitable.
So we're talking potentially higher returns and a better tax situation.
Yeah, it's a pretty good combination.
How do you think investors would react to that?
Well, it's possible we'd see a lot more people putting money into debt funds
Really?
if they're seen as more tax efficient,
Right.
and they offer the potential for higher returns after taxes.
Mm-hmm.
It makes sense that investors would be drawn to them.
Especially now with interest rates going up.
Exactly. People want to lock in those higher yields.
So it could be like a perfect storm.
Rising interest rates making fixed income more attractive,
Yeah.
plus the potential tax advantages,
Mm-hmm.
debt funds could become really popular.
Wow. So that's one scenario.
Yeah. But of course, we have to remember,
What's with that?
investor behavior is influenced by a lot of different things.
Like what?
Market conditions, the overall economic outlook, how much risk people are willing to take, their financial goals. It's never just one thing that drives investment decisions.
True. But AMFI's proposals, if they happen,
Yeah,
they could definitely make debt funds a lot more appealing.
I think so.
And if that happens, we might see some interesting changes in the market.
For sure.
Like what?
Well, if there's more demand for debt funds,
Mm-hmm.
we could see more innovation in that area,
Oh, interesting.
like new kinds of funds and investment strategies.
That's exciting. More options for investors.
Exactly. They'd have more ways to tailor their portfolios to their specific needs.
And this increased activity in the debt market
Yeah,
could have bigger economic effects, too.
right. More investment in debt could give businesses more money to grow,
Uh-huh.
create jobs, and boost the overall economy.
So AMFI's proposals aren't just about helping investors make more money.
Not at all.
They could actually help the whole economy grow.
That's the idea. It shows how connected financial markets are to the economy.
That's amazing. So we've looked at the potential benefits of AMFI's ideas.
We have, both for investors and for the economy as a whole.
But let's be a little cautious for a second. Are there any downsides or risks we should be thinking about?
That's a great point. And it's always smart to be careful when making investment decisions.
Of course.
One thing to consider is that if a lot of people suddenly start pouring money into debt funds,
No.
It could lead to what's called an asset bubble.
So, like, too much excitement could create a risky situation.
Exactly. And if a bubble forms and then bursts,
Oh, no.
people who invested when prices were inflated could lose a lot of money.
That's scary.
It's a good reminder that every investment has some risk,
Right.
and spreading your investments around diversification is always a good idea.
Don't put all your eggs in one basket.
Exactly, even if that basket looks really tempting right now.
Good advice. Another risk to think about is that if the government gives too many tax breaks,
To encourage debt fund investment.
they might not bring in enough tax revenue.
Right, and that could affect their ability to fund important public services.
It's that balancing act again.
Yep, attracting investment is crucial. But so is making sure the government has the money to do its job.
It's complicated.
It is. There are no easy answers.
Well, I think we've covered a lot of ground today.
I think so too.
We've looked at the potential benefits and risks of AMFI's proposals. These are complex issues with a lot of different effects.
Absolutely.
And at the end of the day, it's up to the government to decide what's best for the country.
Right, they have to weigh all the factors and make informed decisions.
So we'll just have to wait and see what happens.
That's right.
But now you know about AMFI's ideas. So you can keep an eye on the 2025 budget.
Yeah.
And make smart decisions about how these changes might affect your own finances.
And remember, this isn't just about one budget.
Right.
The conversation about investment and taxes never really ends.
True.
Stay informed, stay engaged, and make your voice heard.
Well said. Well, that wraps up our deep dive into AMFI's proposals for the 2025 Indian Union budget.
Yeah, thanks for joining us.
It was great breaking down these complex topics with you.
Likewise.
As always, we encourage you to keep learning about this stuff.
Yeah.
The more you know, the better prepared you'll be to handle the ever-changing world of finance.
Absolutely. Knowledge is power.
Until next time, happy investing.